Hi, and welcome to the Price Action Analyst YouTube channel. It's the 4th of June today, and I just wanted to quickly talk about the oil price, West Texas Intermediate crude. This is a weekly chart. There's not a lot of liquidity on the daily chart. Just bring that up. So you can see on the daily chart, like price, the way they record price on this charting package is not very liquid. So we're just going to look at the weekly chart, which suits the purpose for today. I'm just going to go back and look at, so this is weekly WTI price. This was the high of, what was this? 145.28. And that was back in July 3rd, 2008. So if you put trend lines against this price action, it's a very long time frame. Let's just kill this. So it's a very long time frame, but you can see that price is kind of consolidated in a triangle pattern, and it would be nice if we could see further historical data here. I don't think we have the luxury of that, but even in this time frame, you've seen price kind of consolidate in this triangle pattern here. And so in this latest fall in price, which started around 21st of February, and again, this was when the Russians and the Saudis were colluding in some way to, well, not colluding, but I think they couldn't come to an agreement, and I think it was the Russians that increased production, and I think they're also trying to flush out American fracking producers. But anyways, that's what happened fundamentally to drive this price down here. But what we're seeing in terms of the pattern here is that you've got a breakout. We had a strong breakout from this pattern on the downside. So there's a couple of reasons why I don't think that price is going to continue to the downside. And the most obvious one is that this is where price actually went negative for the first time. And again, I don't want to go into why that was all the time, but there's a glut in oil supply. There's boats full of oil parked off the coast, and so no one wanted to take delivery of the upcoming futures that month, so the price went negative. But the price really, it wasn't negative in the sense that the next futures month price was still like $20 at the time. But I think when you have this pricing war, they'll do it as long as they need to do it to flush out the producers or achieve the aims they want, but they don't want to keep the price low for any longer than they have to. So I'm bullish on the oil price into the long term, and I think if we see the inflationary events that everyone's talking about with the Fed printing all this money, I think between those two things, that even though people aren't expecting it, just like they didn't expect negative futures prices, no one's thinking about where the oil, I think the oil price is going to get back to 145 and go past that. I think we're going to see oil more expensive than we've ever seen it before in the long term. So how does that relate to the charts? So generally what happens when you get price, a breakdown of price like this, is you'll get a retest. You get a retest up to this air or to the trend line, and you'll hit that short. And that's probably still, if you're trading futures or options on the oil, that's probably an area to trade right there. That retest, you're very likely to see some sort of weakness down and a retest of that area. So in an ideal world, price would come up, retest there, and it would come down if I was going to go long. I would wait for price to come to the end of that air there. So price would come up here. If it showed me weakness, I would hit it short here. And if I was short down here, I'd probably be looking to get out around here on any sort of strength. So likewise, on that strength, I'd be willing to hit that to the upside. But again, none of this is done without, you know, when price gets here, I need to see the weakness before I enter the trade. And likewise, if price gets back here, I want to see the strength before I enter long. So how we would trade this is we're going to watch and see what happens to price when it gets up here. If it shows strong weakness, then that's an indication it's coming back down. If it kind of just stalls here or just bursts back inside, then price is coming back inside to this triangle pattern. And then again, I'm using the fundamental reasons to bias my judgment. But what I'm really expecting to see is price, when it does come back inside, it's eventually going to test this top trend line. And when it tests it, you're going to have selling pressure probably between these two highs here. In the middle of those, you'll see some sort of selling pressure or a stall, but you're probably going to see price break out of here. It might break out and retest. But again, it depends what happens here. So really, the point of all of that is if I see price bust out of here and it retests here, I'm waiting to hit that long on the retest. And a lot of people probably won't be thinking that because they'll be thinking, wow, oil's expensive at 70 bucks, you know, seeing as that we went negative a few months ago. But I'm very bullish on the oil. I think when oil comes out of here and retests this trend line and goes up, it's gunning for this previous high. Gold's doing a slightly similar thing. Like gold's almost certainly going to retest its previous high of 1900. And I think for the same reasons as the oil in terms of the inflation, I think the prices are going to be higher than we've ever seen them before. So that's my thoughts on the oil price. Again, you know, we've seen a historic low that went negative. You've got a very strong rebound off of that. So if price does happen to test that, it's almost certainly going to run up off the back of that. And then, you know, we'll have to wait and see what happens here. But my expectation is that it's actually going to test this trend line eventually, and it's going to break out on the upside. So how would you take advantage of that trading? From my limited knowledge, like I've only been able to trade oil with futures, the CL. And you know, you would use the daily chart. When price gets up here, you'd watch it on the daily chart, but then you'd really want to go to like a futures trading platform and drill down to like an hourly chart and wait for weakness to hit that short. And I mean, if price goes from there to there, that's a substantial amount of money on the futures. So, you know, that's a short-term trade, but it would be a valuable one if it works out. The point of this chart is just to show you what my long-term expectations are for the oil price. So, thanks for watching.